Welcome to the Daily Update. This is being prepared Monday, August 29th, where we'll look at the action in the market today and then see how things look for Tuesday, August 30th. And what I talked about in some more recent videos over the weekend is that we might see some follow through weakness as folks got home on Friday and went, oh my gosh, look at how bad the market reacted to things. And they might have decided to sell. And then they ended up doing that on Monday. So we did see some follow through weakness. We were down on the day, but there are a few areas of hope that I'll point out as we go along. But pretty much everything has switched over to a pretty strongly negative stance. So right at the open, we did have a gap lower. Even though the daily range was not all that wide, we saw most of the move from Friday to Monday come right at the open. And then prices ended up going sideways right after the open. As the day went on, we didn't even get down to S1 at 39.61. Then prices kind of drifted a little bit higher and higher. They got back up to the unchanged level, even went slightly positive for a short time. And as I keep pointing out, especially when we have a gap, the unchanged level can act as either support or resistance. Well, since we were down, that ended up acting as resistance. And then after that, going into the close, we did see some selling. So we came back down more into negative territory. We ended up closing down 0.67%. Below average volume seems to be the average these days because we're really seeing things pull back in that area. The technicals, yeah, they're negative. And some of the extreme readings that we saw after Friday's session, some of those have worked off. And some of them are still showing that we're pretty extreme, but overall, the picture right now is just not very positive. But as I said, there are a couple of areas of hope that I'll point out as I go through the charts here. Inflation and interest rates, which also produces growth concerns, that's the fixation right now. And of course, we've got the whole list of geopolitical things that anytime could come to the forefront, but nothing else, at least on a big scale, is really having that much of an influence. Earnings are being released. There's still the debate about a recession and are we in one? And then I kept the Fed speak highlighted because there might be additional comments or speeches or interviews or statements of some kind that end up coming out that the market latches onto. So what are some comments that we can make? There was some follow through weakness from Friday, but it wasn't as intense. We don't see very many days that are as intense as what we saw last Friday. This is a positive thing. The 50-period simple moving average on the Dow, the NASDAQ, and the NASDAQ 100, they are providing support right now. Can we hold on to that? Can we bounce up off of those? These are three major indexes, and we've come right down to that 50 period. And then we're still holding that level, or with the Dow, we've actually gone a little bit above it. So that could be something positive. So something to watch for in Tuesday's session. Our rotation, our setups, our different scenarios that we're working on, they're still off on the back burner right now. They're still valid. They're still there. I'll show you the charts, but we're not really focusing on them until we see more follow through with price. The 10 to the 2 and the 10 to the 5 still are inverted. And there's a really strong continuation of that inverse correlation between interest rates and stocks and the dollar and oil. So if interest rates are going down, oil's going down, the dollar's going down, that could give some support to stocks because they're moving in opposite directions right now. We switch back to neutral. It's kind of interesting as far as sentiment with the down day. And we didn't have any economic reports that came out. The trend is negative and it's weakening. And I have to keep our bias at negative. There really wasn't much positive in Monday's session. And our overall momentum continues to be negative. So let's go back and talk about what happened. We were kind of in the little bit of the greed area, and then we shifted back and this thing bounces all over the place. So we're back to neutral right now as far as sentiment is concerned. And here's the historical chart. This should be the VIX, but this is the RIDEX bear bull ratio, is just showing that a lot of people are getting more into bullish funds right now. So they're turning more negative in that regard. We have some Isabel net charts. This just shows that the announced buybacks has really declined, and the actual buybacks, that is also starting to decline as the market is going down, as these numbers are reported. It's generally more positive when a company will go out and buy its own stock. If they're not willing to buy its own stock, that means they're going to wait, at least for a while. And so this is a little bit more negative in this chart. We're seeing a lot of outflows from high yield bonds. That's also really dropping down. Bonds are starting to disappoint again based on price. And as interest rates continue to go up, and so people are pulling their money out of the high yield bonds, especially the corporate ones. And now this is kind of interesting because for pretty much all my lifetime, we have had this thing called petrodollars, which is where oil is based around the US dollar. Well, we're starting to see a shift away from that, and that could really pose some problems for the US dollar going into the future. Russia, China, they don't want to play that game anymore. And so we're seeing it converted a little bit different at times, where we see on this chart oil prices in when they're converted into the yen, and that has really spiked up, and then oil prices converted into euros, where it looks a lot more tame when you show it with the dollar, because the dollar's been a lot stronger than these currencies. So this just shows it's really been going up. And I wish they had included the dollar on here. It would kind of show the difference, but they didn't here. This is the current Goldman Sachs adjusted earnings per share forecast. They're still looking at things getting better into the rest of 2022 and into 2023, where the market is just saying, yeah, we have a shot at getting back to 4,300. And that's kind of where we're at right now. But Goldman Sachs is a lot more optimistic about things. We also see a lot of inflows that are coming back into financials, which this seems like a total bipolar situation. One chart we look at shows they're going out, another chart shows they're coming in. This is the financial conditions index, and basically this chart might be a little hard to understand. As this goes up, this means that we have tighter financial conditions. Well, we had been going up through most of 2022, we fell back down, and now we're starting to go back up again. So could this produce some additional headwinds for the market? Here's another sentiment reading, just showing that we're tilting a little bit more towards the greed side, or the positive side of things right now. And we're pretty much in the middle with our own sentiment indicator. Here's another sentiment indicator, also showing that that's the black line that we focus on here, not necessarily an extreme reading right now. And then this is an updated chart of the jobless claims. We want to keep an eye on this. If we're going to start really hitting some difficult times, this blue line is probably going to start to go up. And it's been going down lately. And the employment situation, which we'll be getting that at the latter part of this week on Friday, that's the big report. But every week we get the jobless claims, and we'll want to keep an eye on this to see, is it really going to spike up? Also, the GDP now was updated, and they are currently predicting a positive GDP for the third quarter, which is what we're in right now. Here is the different sectors. It shows that growth was down a lot more than value with the large caps, and pretty much across the board as well. So here's the VIX, where with the down day, we started to really shoot up on a closing basis, and we're starting to shoot quite a bit higher with the bar chart as well. Here's the VIX of the VIX, also starting to show an increase in volatility. The Ulster Index, I'm switching back now to just the daily chart because this is showing a little bit more of what's actually happening. We've been able to get above the moving average, and fear is starting to increase. We're down 16.35% from the all-time high. Here's the equity put call ratio, actually declined a little bit on the daily chart, where it's still in an upward trend on the 5-day chart. Here are the pivot levels, and you see they're not very far apart from each other, because even though we had a gap down, the daily range was not all that significant in Monday's session. So we could hit these levels fairly easily. Here's another chart, and I tried to update this where we had come up to the 50-day moving average. That was the big line in the sand. We've rejected that so far and have fallen back. We came back down. This had been support. We broke through that, and now it has become resistance if we start to turn around. Another interesting thing is here. See where we have the 50-period moving average? That is right on a pivot level. This could provide some support at right about 4,000 for the S&P 500. So if we decline and get down to that level, we'll want to be watching to see what's going on. Are we bouncing up off of that, or are we just going to cut through that and keep going down from there? So that's one thing to keep an eye on for Tuesday. And then down below, you can see we're below average with the volume. Here are the pivot levels. And this is interesting. We're right on the pivot for the month of August. So this is another one of those things that just amazes me, that mathematically this stuff seems to always work out. And this could be a tipping point. Are we going to be able to bounce up from here? Or is this just a short-term pause before we get set to go lower? I have a number of fib charts, and I'm kind of rearranging how I display those to you. This is going from the March high to the June low, and how we had come back up over 61.8% from that level. Now we're falling back down, and we're getting down to this level. Again, this is 4,012, but right around the 4,000 level. Please remember that I draw these lines on the chart myself, so they're not exactly precise. I can't punch in the numbers. I have to eyeball this. So some of my lines on here may not be exact. Here's another short-term Fibonacci chart. This goes from the low that we set in June back up to the 50-period moving average, and then to see how we've retraced down below that. And we do have some other support at 39.79 or so, kind of a little bit below the 4,000 level. So this could be really coming into play with things. Then some intermediate term fib levels. This goes back from the all-time high to the June lows. We got above the 50% retracement, and now we've been breaking down below that. Another fib retracement chart, going back to a low set in 2021 to the all-time high. We did eventually find some support down here. We retraced again 50%, but now we've been falling below that. And then here's the other chart showing, and I tried to extend this line over a little bit, which is right at around the 40-20 level or so. We want to keep an eye on that, that level, because that could still act as support. We might be hitting support at this level right now, even though we're just a little bit above that. And I don't know why I'm having such problems with my throat right now. It seems to do that when I start recording. Here are the different sectors showing that since we had a down day, we had tech, real estate, communication. Those were the weak areas, with energy being up the most in Monday's session. Here are the scooter scores, which somehow I did not sort in the correct way. So looking down, I actually sorted them. No, it's not even from the bottom down. It's still energy, utilities are looking the best, with communication also the worst. I forgot to hit this little button here and sort that column. Here are the sectors. Energy has really been making a comeback, followed by utilities, where we have the rest of the sectors are still negative. Here are the indexes going back to the high that the S&P set in January and how they performed since then. We did have mostly negative technical alerts, and really nothing for the S&P itself. A lot of sectors. The NASDAQ, of course, has been plowing all over the place. The Dow dropped below 32,000. We had oil getting above. That could be seen as more negative, but we're looking at up and down prices. It got back above 95. The dollar is now continuing to go higher and has set a new 4-year high. Our scores right now, the mid caps are coming in the best. And even this isn't very good. We want the 80s, 90s, the high 80s and into the 90s for our technical score. And this is the best performing index right now. And it's giving us 68.3, followed by the Dow at 64, the small caps at 58.7. Then comes the S&P at 52.6. So it's really breaking down technically. And the Qs are really breaking down. They're at 25.5. All right, so let's look at the intraday chart. We did gap lower at the open and then pretty much chopped sideways for a while, tried to go up, went a little bit down, and then we inched our way back up to the unchanged level. You can see where we went slightly positive a couple of times here, but that really wasn't happening. There wasn't really any effort behind that. So then we saw some weakness going into the close. Our trend is negative. You see how the red line is starting to break above, although the ADX is declining and it's below the moving average. And then the Arun, really, it's not telling us much right now. It's showing a decrease in buying and a decrease in selling because it's looking back not very far into these prices where we were not so long ago. Breadth, yeah, it was negative, but not as negative as what we saw on Friday. So we saw a decline based on price and volume. The advanced decline ratio is now starting to turn more negative. It's dropping below 0. New highs, new lows, also starting to decline. Accumulation distribution, the red moving average is starting to roll over and we're just about ready to cross below the moving average. So that's more negative. Short term, the decision point, they changed some of their scorecard. Their trend model in the short term is back to neutral. They're down with the PMO signal, where intermediate term, they're still holding up, and long term, they are still negative. The rate of change, this is what was overdone in Friday's session, and it bounced back up in Monday's session. Rate of change 5, also not as extreme as it was. Rate of change 10 period, this is still going into extreme negative territory. So that's overdoing it a little bit, but that's a little bit longer term, where the 1 and the 5 are short term. You could almost put this into the intermediate term camp. Here's our moving averages, where we're starting to come back down, and these shorter term moving averages are starting to roll over. It's looking like kind of a spaghetti mess. Stochc RSI and the Williams percent R still continue to be extreme negative. The force index, extreme negative, because we're right at the outside of this Keltner band here. This is positive too. The Swinland trading oscillator actually showing an advance based on price and volume. And as I say over and over, sometimes this is a good leading indicator for us, but it's also been wrong. It'd just be nice to know which is which at the time we're seeing this, but we just want to be aware of this. And we couple this with some of the other indexes being at their 50-period moving average, and that could provide some support. McClellan oscillator, negative and starting to get extreme negative. Seeing a decline with the 20, 50, and 200 moving averages. Stochastics, extreme negative, short and intermediate term, and are declining in the long term. We're getting back down to the 50-period moving average, where we already dropped below the exponential. That's the blue one. And we're coming down to the 50-period. Could this provide support as well? We haven't been able to get down to that. That's just at about the 4,000 level. It's actually at 4,003. So if we're seeing this in the Dow, the NASDAQ 100, and the S&P retreats a little bit, and all of those indexes come up off of that, that could be something positive. And then the Sean trend meter continues to decline. Our PMO is negative across the board. Our studies are negative, we're a little bit extreme negative with those that are rising. We're getting extreme negative with the buy signals, and we're declining after being extreme positive with those that are above 0. Chaikin oscillator, declining. Chaikin money flow, starting to turn negative. Volume, even though it spiked up a little bit after Friday, it's still well below average. The vortex has switched over and become negative. Summation index based on price and volume are also negative. All of our oscillators are now negative. The BPI starting to decline after giving us an extreme positive reading. That is turning more negative. Ease of movement also showing weakness. Ultimate oscillators declining. Money flow index declining. CCI 14 period, extreme negative, as is the CCI 20 period. Here's another one showing the 19-day exponential moving average of the advanced decline line. It's where we had gone extreme positive. Well, now we're starting to drop below 0 based on price and volume. So that's more negative as well. TTM squeeze, it switched over to negative now. We have a new red bar here. Now, it's faded, which that kind of goes counterintuitive. That means it's stronger. When they're dark, that means it's weaker. Or different charts, Heiken Ashi looking more negative. We've switched negative on the Kegi. We didn't add a new box with the Renko chart, but we're looking more negative. And the 3-line break is also negative. We added a new 0 with the point and figure chart. Our different trading systems, negative with the Elders Impulse with the SPX and the SPY. And we are negative with the SAR system as well, with the dots on top. We haven't switched over to purple yet with the go, no go system, and it's probably really hard to see, but this is a light blue right in here. Long term, we're starting to dangle now with the 100 period moving averages, where we had dropped below both of them after Friday's session. Well, we continue to be below them. Now, if we do find some support and start to go higher, will we bump into this 100 period simple moving average if we go back up? Our moving average tree, we got all the way up to the top and we're continuing to come down. Now, moving average steady, still showing a decline with the 50, 150, and 200. Special K starting to roll over and go back down. Diamonds, negative. And here's the Dow. See how it came down to this pivot level and we closed right on the 50 period moving average. That could be positive with the algorithms out there. See, they're seeing this stuff too. And this is when they kick into gear and start to do things. Could we get some support off of this and bounce up? If we break below it, that's going to turn things a lot more negative. The Qs are also negative with the Elder, and see how it came right down and closed right on the 50 period moving average. And we're right on a pivot point now with the NASDAQ 100. Can we get some support? Even if we fall a little bit below that, you have the S&P hit that level, and could some big buying come into the market? Or if it doesn't come in, that's going to shift things even more negative. With the declines, we're seeing a real increase with the Vixen, both with the line chart and the bar chart. The NASDAQ also down to the 50 period moving average and actually bounced up a little bit off of that. The mid caps, not really showing us anything right now, and just we saw some more follow through weakness as we did with the Wilshire. The dollar still just screaming to the upside these days, and we're seeing a real negative correlation between the S&P and the dollar. So that's what I've been watching. Is the dollar up or down? If it's down, that could give some support to stocks. If it's up, that could provide some resistance for stocks. Gold. Again, you'd think this would be going higher and higher, but it's just not. It was up a little bit in Monday's session, but this chart still is quite negative, as it is with silver, and it was down 0.4%. Oil is starting to go back up again. That could be another headwind to keep in mind. We're up slightly over 97 now, and we're seeing that inverse correlation between the S&P and oil. Looking at bonds, not really following through here. We're still seeing a breakdown, and the ETF was down 0.45% on Monday. Our world bond index is also showing some more weakness based on price. We're starting to see what could be a correlation of stocks and bonds going in the same direction. Now, these are bonds based on price. So if we get to that point where stocks go up and bonds go up based on price, that will bring interest rates down, and that could be positive. And if you combine that with the potential support that we're at right now, could this produce some kind of a bounce? Just something to think about for Tuesday's session. Yield curve still negative with the 10 to the 5 and the 10 to the 2, and we're getting close, but still not inverted with the 10 to the 3 month. The tech sector to the 10-year also inversely related. The yields are going up longer term, and we really saw a turn up overall, and see how these lines are crossing, and that's why we're getting these inverted yield curves. Our scenarios, not much to talk about here. There's other than to say they're still on the table, they're still viable. What would take them off the table is if we drop down and give another extreme negative reading. So now we just look at these charts and just wait for price to follow through overall. That's just about all we can do right now. Small caps also saw some weakness, down 0.95%. And the ratio shows that small caps have been going up just a little bit, even though they declined in Monday's session. So we're trying to wait for a spike up in this on this red chart. Well, it's not happening yet, and we are in danger of taking out the spike that we had been working from. We're also seeing an inverse correlation between the S&P and the 10-year yield. And then here's our sectors. See how they're breaking down a bit with the Qs, discretionary and growth versus value. And the large, mid, and small caps are also showing some weakness. Doesn't mean they're gone. It just means they're being delayed now for at least a while. And until we see things really shift, we'll still keep these on the back burner. We're also seeing that inverse correlation between the S&P and the 2-year yield, which is not helping this chart because we're probably just getting ready to take out this other spike that we've been working on. The staples were down slightly. And so we're still looking at this third spike over here. We fell back. We have not come back to that level yet, but we want to see this really fall if it's going to give more support to the S&P 500. So what's our outlook for Tuesday? The technicals are negative, but they may be finding support. Now, is that going to shift the environment? I don't know, but it's a place to start. It's something to look at on Tuesday and see how it plays out, especially as we get closer to the close. And let's see, we do have some economic reports, but I forgot to put those on here. I'm sorry. We've got our geopolitical events and all the different things that are going on, but inflation and interest rates are the biggies. Actually, we don't have any real significant reports coming out on Tuesday. Our scenarios, we still have to go with the down scenario because of all the things I mentioned, and the technicals are negative, but are they finding some support? So you might be a little leery of going short right now unless we break through these levels that I've been talking about. If you're looking at going long and for things to go back up, we want those support areas to hold, and that's what we would look for, but we haven't switched over positive at that point. These are just different clues that we're getting that the market may be trying to recover if that even plays out the way I mentioned it. In our scenarios, they're on hold right now. The technicals not helping us, as are the moving averages, other than possibly providing support. And depending on how you use the ADX, you could say that we're in a weakening trend, or you could say that we're in a negative trend because the red line's now on top, or you might want to wait until it drops below 20. So our conclusion, we're still negative across the board right here until we see some positive price action going into the close, especially. That's the stance that we have to take. So thank you. I hope you found this helpful. I hope I gave you some things to watch for in Tuesday's session. I'll be watching these things too. And if they play out, I'll point them out in Wednesday's video.